30 years ago, a 13-year-old girl moved to Nashville with a guitar and a dream. Today, Forbes estimates her net worth at $2 billion. Taylor Swift is not just the most famous musician on the planet. She has become one of the most powerful business operators in entertainment history. And the story of how she got here is not what most people expect. When Variety reported that Forbes had placed Taylor Swift's net worth at $2 billion, the headline traveled around the world in minutes. But behind that number is a story that finance and music industry insiders have been watching for years. Swift's fortune is built differently from most celebrity wealth. It is not primarily from hit songs alone. It is from the ownership of those songs, the revenue from performing them, the royalties that compound year after year, the business infrastructure she has built around her music, and the extraordinary loyalty of a global fan base that turns every release and every tour into an economic event. $2 billion, according to Forbes. Not just a headline about fame. A case study in how to build durable financial value from creative work. The Eras Tour became something that economists, not just music fans, paid close attention to. The tour was designed as a retrospective of Swift's entire career, spanning multiple musical eras, each with its own visual identity, costume changes, stage design, and set list. Polestar reported it as one of the most commercially successful concert tours in recorded history. Fans planned international travel around specific show dates. Cities reported measurable economic impacts when the tour arrived. Merchandise lines sold out across product categories. The concert film became a theatrical release and later moved to streaming platforms. The secondary ticket market created its own economy around Swift's show dates. The Eras Tour demonstrated something important, that Taylor Swift had built an audience relationship so strong that it converted into direct, large-scale economic participation on a global basis. That is not just a music industry metric. That is a leverage ratio that private equity firms study. A song is not just a song. In financial terms, a recorded song is a royalty-generating asset with a long, useful life, a diversified revenue stream, and the potential for significant appreciation over time. Songs earn through radio play, streaming platforms, sync licensing in films and television, commercial placements, live performance rights, and catalog sales. Taylor Swift has released 12 studio albums. Her back catalog continues to generate streaming revenue and licensing income years after initial release. The total catalog value of a commercially successful artist at this scale is a multi-hundred-million-dollar financial asset by any credible valuation methodology. When private equity firms began acquiring music catalogs at high multiples of annual royalties in the 2000s and 2010s, the market was signaling something that had been true for decades. Popular music catalogs are predictable, long duration, inflation-resistant financial assets. Taylor Swift's catalog represents one of the most valuable in modern music. In 2019, the situation that changed the industry's conversation around master recordings went public. Swift's original master recordings, the recorded versions of her early albums, had been acquired by a management company without her participation in the deal. She announced she would re-record her first 6 albums, releasing Taylor's version editions that fans and streaming platforms could choose to support instead of the originals. The re-recording campaign was a business strategy as much as a personal statement. It created 2 competing versions of the same catalog, shifted listener behavior, and demonstrated that an artist with sufficient brand loyalty and fan support could redirect streaming value away from masters she did not own and toward masters she did. The strategy has been studied by legal scholars, music industry professionals, and business school professors. It changed how the industry thinks about artist leverage, ownership rights, and the commercial power of fan loyalty. The economics of fan loyalty at Taylor Swift's level are not a soft concept. They are measurable in hard data. When Swift announced an album, streaming platforms reported measurable traffic spikes. When she released tour dates, ticket booking sites reported server strain from simultaneous demand. When she spoke about a cause or topic, search trends and social media metrics moved visibly. This kind of audience relationship creates a specific type of leverage that most businesses cannot buy and most artists cannot build. It is earned through years of authentic connection, storytelling, and consistent delivery of high-quality creative work. For Swift, it translates into first-day streaming records, album sales figures that are rare in the streaming era, merchandise revenue that extends across product categories, and a live touring demand that allows her team to set ticket pricing at premium levels while still filling stadium seats worldwide. The business pillars that underlie Taylor Swift's estimated net worth include multiple distinct revenue streams, each compounding over time. Touring revenue from global stadium shows has been one of the largest contributors in recent years. Music catalog income, including streaming royalties, sync licensing, and publishing, represents a durable long-term asset. Merchandise generates revenue, both at shows and through online and retail channels. The Eras Tour concert film, released theatrically and later on streaming, created an additional revenue layer from existing creative work. Real estate holdings across multiple properties in New York, Los Angeles, Rhode Island, and Nashville represent further asset accumulation. Brand partnership agreements, though selective, have added additional income. And the direct fan relationship, maintained through social media, surprise releases, and fan events, functions as a distribution and marketing infrastructure with essentially no equivalent cost in conventional advertising. Taylor Swift's strategy has influenced how the broader industry thinks about artist ownership and leverage. Catalog acquisition deals are now routinely scrutinized for re-recording rights clauses. Major streaming platforms have updated their understanding of how artist brands and fan loyalty interact with catalog streaming numbers. The creator economy more broadly has taken note that an artist who owns their work, controls their brand, and maintains direct relationships with their audience holds structural advantages that extend beyond any single album cycle or tour. Swift is often cited in conversations about artist rights, streaming economics, and the future of how musicians build lasting wealth. The model she has demonstrated is studied not just in music industry circles, but in business schools, investment discussions, and creator economy analysis. Looking ahead, the signals to watch include the completion of the re-recording project, new album cycles, and their effect on streaming and touring economics. How artificial intelligence and likeness protection laws evolve around her image and voice. The long-term catalog valuation multiple as music royalty markets develop, and any major ownership or licensing moves that extend or consolidate her interests. Each new album cycle resets the economic flywheel. Streaming, touring, merchandise, and media attention all compound from the same creative release event. Taylor Swift did not just become famous. She understood something that most artists learn too late, that creative work and business ownership compound together. Her music generates income. Her catalog appreciates in value. Her audience converts attention into economic participation at a scale that rivals major entertainment brands. The songs, the story, the audience, and the ownership all compound. That is not just the story of a musician who became rich. That is the story of how creative leverage, when built intentionally, becomes the foundation of a $2 billion empire.